Welcome back to the Small Business Toolbox. I'm Andy Mack and I've been self-employed in the UK for all of my adult life. Today we're talking about a subject that, even if it doesn't affect your business now, it probably will affect your business in the future, and it's certainly something that you need to get your head around, and that is VAT, which is value added tax. VAT is one of those subjects that the reality of it for your business is probably very simple, but explaining it is really complicated. So I'm going to try and give you a very brief kind of overview of VAT, just to kind of light the blue touch paper and hopefully give you enough information that you can ask your accountant the right questions and also plan for the future for your business in case you do need a VAT register later down the line. So in the UK, VAT is a consumer tax. And what do I mean by a consumer tax? Well, it's a tax on entities that aren't VAT registered. And that's essentially because if you are VAT registered, you can claim back any VAT that you pay, which is great, but the trade-off is if you're VAT registered, you also have to charge VAT on everything you sell. So it instantly makes you 20% more expensive. So generally speaking, it's in your interests not to be VAT registered because no one wants to put their prices up overnight by 20%. And in the UK, we have a threshold for VAT registration, and at the moment it's £85,000 of turnover in a rolling 12-month period. So as long as you're keeping your business turnover well under £85,000 a year, you don't need to worry about registering for VAT. But that's not to say you shouldn't voluntarily register for VAT. There are plenty of situations where voluntary registration could absolutely work in your favour, and really that's something for you to have a chat with your accountant about, because only your accountant is going to know that level of intimate details about the financial operations of your business, and that's why it's so important to have a good accountant. But let's say it how it is. If you're VAT registered, you are an unpaid tax collector for the government. You charge VAT through a VAT invoice to your customer, and you give that tax to HMRC when you do your quarterly VAT return. I'll explain how it works in a little bit more detail, but don't overthink it. If you're VAT registered, you charge an extra 20%, and you can also claim back the 20% VAT that you've paid on any expenses. So let's imagine your name's Bob and you run a pen shop called Bob's Pens. And here's a pen, one of your lovely pens that you're going to sell to your customer. So here's your customer here. You buy your pens in bulk from this bulk pen warehouse over here, and they buy their bulk pens from the pen factory all the way over here. And to make this nice and simple, we're going to assume that they've got some money to start with at each point down the chain. So the first thing that happens is that the pen factory gets all of the raw components together to actually make the pen in the first place. And they might charge 20 pence per pen when they sell them in bulk. So the bulk pen distributor buys them for 20 pence each, and the pen factory charges 20% VAT on that, which is 4 pence. So they end up charging 24p in total, and the 4 pence goes to the government. Since the pen factory gave the bulk pen distribution warehouse a VAT invoice for 24 pence, which included the 4 pence VAT, the bulk pen company can then claim that 4 pence back from the government. You then get in touch with the bulk pen company to buy your pens off them, and they might charge 50p per pen when you're buying them in bulk. So they're going to charge 50p plus 20% VAT, which is 60 pence. So you give them 60 pence. You get your pens, they give the VAT to the government, they give you a VAT invoice, you can then claim that VAT back from the government, and then your customer comes along and you charge £1 each for your pens. Well, because you're VAT registered, you're going to have to add VAT onto that and charge £1.20. So your customer ends up paying you £1.20 for the pen. You give them a VAT receipt that includes the 20p VAT. You give that 20p to the government. The government are 20p better off. You're £1 better off than you were before. The bulk pen company is 50p better off than they were before. And the pen factory is 20p better off than they were before. The only person who's worse off down the line here is the customer, but they've managed to get their pen for £1.20, but 20p of that doesn't belong to Bob, it belongs to the government. Well, let's imagine now that our end customer is a lady called Jane, and she's a freelance journalist, and she needed her pen to write down all of the articles and things that she does for her job. Well, Jane could register for VAT, and if she registers for VAT, she could claim the VAT back on her pen. But on the flip side, she'd also have to charge VAT on her sales. But here's a scenario where it might be in your interest to register for VAT, because if Jane only deals with other businesses who are VAT registered, then they can claim back all of the VAT that she charges. So it doesn't make Jane any more expensive. It only makes Jane more expensive if she sells her articles to people who aren't VAT registered. So even though Jane might be under the VAT threshold, it might be in her interest to register so that she can claim back all of the VAT she's spent on all of her business expenses. Now, obviously, the reality of this is that each business down the line just keeps a record of all of the VAT that they've received from their customers, and also all of the VAT that they've spent on expenses, and they just pay the difference to HMRC. One of the key things you have to remember, though, is you're either VAT registered or you're not VAT registered. You can't say that you're only going to charge VAT to VAT registered businesses and you're not going to charge VAT to customers who aren't VAT registered. You can't do that. You either charge VAT to everyone or you don't charge it at all. And if you're over the VAT threshold, then you have to charge it to everyone. So let's imagine you run a window cleaning business and you're above the VAT registration threshold, so you're going to have to charge your customers VAT. Well, what does that look like? Well, here's an actual VAT invoice from my window cleaner. And it's very similar to a normal invoice. If you haven't already watched the video that I did about how normal invoicing works, there's a link in the description below explaining how invoices need to be put together, but it's very similar to a normal invoice. You include your company details. If it's a VAT invoice, you're going to have to include your VAT registration number. You include the end customer details. You have an invoice number, which they have to be sequential on VAT invoices. You have the tax date. You have other optional things such as order numbers and account numbers and things like that. And then you need to provide a breakdown of the VAT. So here we can see windows cleaned on 5th of July. They're charging £18.75 for the window clean. So that is the net amount. They're then charging VAT at 20%, which means they're charging £3.75 VAT. That £3.75, when I pay it, they'll pass that on to HMRC. And then down the bottom of the invoice, we can see the total net amount of £18.75, the total VAT amount of £3.75, and the invoice total, which is the amount I actually have to pay, of £22.50. If you are VAT registered, you're probably big enough that you can afford an accountant and also some accountancy software, and your accountancy software will keep track of all of this for you. You can actually see this business here, it says on it, they are using Sage for their accountancy software. But being able to track all of this information and work out at the press of a button how much money you owe to HMRC in VAT is one of the many benefits of using proper accounting software. But you only really need that once your business gets to a certain size. For smaller businesses, it's just as easy. In fact, it's probably better to work this out on spreadsheets because you get a really clear understanding of how it all works. And then when you do transition to accounting software, you know what's going on behind the scenes. At the end of the day, accounting software is just a glorified calculator, and there's no more efficient way of calculating lots of numbers than using a spreadsheet. That is literally what they're for. So there you go, folks. I hope that made sense. If you do have any questions or comments about VAT, pop it down below. Do remember, I've only barely touched on VAT in this video. I haven't talked about different VAT rates. I haven't talked about why some things are 0 rated and some things are not applicable for VAT. I haven't talked about how you actually do your VAT return. The whole idea of this video is that you know enough to prepare for the future where you might have to start charging VAT and potentially make everything 20% more expensive. And hopefully you'll also understand why in certain situations it's a good idea to voluntarily register for VAT. If you're new to the channel, don't forget to hit subscribe. Thanks once again for watching. I shall see you next time. Bye bye.